Good afternoon, my name is Jordan Lambert, market analyst at Referral Management. Gold got wrapped up in a broad-scale sell-off yesterday, triggered by the Bank of Japan unveiling no additional stimulus measures and concerns about the legality of the ECB's OMT programme. The precious metal has been well known to be a good hedge against inflation and currency devaluations, hence a withdrawal of money supply tends to cause investors to move away from gold and go back to currencies. If the German court ruling on the constitutionality of the ECB's unlimited bond purchases pledge is concluded to be illegal, this could unravel all the hard work of Mario Draghi's and his attempts to lower bond yields in highly indebted nations. The ECB hasn't yet needed to activate the bond buying of its outright monetary transactions program, as the pledge in itself of unlimited purchases has instilled confidence in the euro. However, this could be eradicated if the pledge isn't supported by law. This would weaken the euro dollar and put heavy pressure onto gold. Conversely, a success for the ECB could give investors more appetite for gold, so be aware of that. My suggestion would just be to have your news feeds at the ready so you can trade any news that comes out. Also, a poor Chinese trade data at the weekend has dampened the mood for the metal, as we receive further evidence that points to slowing growth in the metal's second largest importer. Just taking a look at the charts right now, I'm looking at the 15-minute chart mainly. We generally know that the sentiment is bearish since the US non-farms on Friday. On the weekly chart, we have two side-by-side shooting stars. Let me just show you here. Two shooting stars here and here, so that is bearish in the short term. After yesterday's decline, gold did recoup some of its losses, but it's finding resistance at this bearish trend line that started on Monday, and as you can see, price has recovered but found resistance here, and it keeps finding resistance here. So a good shorting opportunity would be to sell anytime now and have a tight stop just above the trend line, or just above one of the lower highs, either here, or you could just put it above a nice round number of 1380. So just be aware of that. If we do get a trend line break, in the current environment, it is only likely to probably produce a few dollars of gains. It would need to be supported by fundamentals because the overall sentiment is bearish, especially since Friday. But a success for the ECB in its court case could do the euro a lot of good and weaken the dollar and help gold move higher. So a break of this trend line, do go long very carefully. It will need to be supported by fundamentals. So really you should be looking to trade and go with the overall longer term bearish trend at the moment. And just look right now, we have short term support around 1375. We've got a series of lower highs, and prices now attack this level at 1375 in the short term over the last few hours, a few times. If it attacks it again, it could give way and we could see a spike. That's not a spike, a sharp decline of a few dollars. So just be aware of that as well. Thank you very much for listening to me, and I'll speak to you again tomorrow. We have a fantastic promotion for new accounts at the moment. To check out the details, you can visit our Facebook page or our LinkedIn page, or alternatively you can visit the Referral Management website. The required links are below this video. Speak to you soon.